There is some concern about this higher for longer, and within the next 2 years, something like over $1 trillion in commercial real estate loans will be due. How is the industry preparing for that?
Hey, Emily. I think it's a great commentary, and I think it's something that we need to watch. You know, the U.S. is facing multiple challenges in terms of real estate right now. You've got higher interest rates. You've got less credit availability, and you've got supply-demand imbalances. And so when you put all of those together, we're seeing some short-term issues that we think create opportunities for sort of longer-term structural trends. And as Tanvir said earlier, and what we were talking about related to housing in particular, you've got these huge secular tailwinds behind housing because of the shortage. And you've got some short-term issues due to the what we were talking about. And so as a result, we think it creates a lot of opportunity to invest in U.S. commercial real estate today.
How do you assess the risk-reward balance now? Comparing real estate capitalization rates with Treasury yields, the spread is increasingly currently at the narrowest since the 2008 GFC. So how would you gauge this in terms of risk-reward?
So I think that's exactly right. And so from our perspective, values have probably bottomed, and they have not, and market sentiment hasn't caught up to it yet. And so while cap rates have increased fairly dramatically, depending on where you look at it, it's 200 to 300 basis points across multiple asset classes, which indicates that values have dropped fairly significantly to the point that you were making. But additionally to that, what that gives us confidence in is that if you can enter into projects at a discount to where those values are at today, you can be in a position to extract alpha out of the market.
What about worries around the commercial real estate market being a bubble before we go, Warren?
Well, I think from the biggest worry I have is the older office stock that's going on in the U.S. A stat that I think is an amazing stat in the U.S. is buildings built before 2015, since COVID, have lost something like 250 million square feet of absorption. So that's basically like the size of Manhattan. Buildings built after 2015 have gained 140 million square feet. And so what we have in the U.S. are haves and have-nots. Newer buildings are doing well and are attracting tenants and are able to be in a position to benefit from the growth that's hopefully going on in the U.S. But the worry is obviously the older buildings that are stuck that we need to figure out what to do with.
Okay.